Today's top stories. The BLS chief is out. Apple's adding $100 billion to U.S. manufacturing. JP Morgan just linked Chase to Coinbase, and AMD and Supermicro are selling off. Watch to the end for my 1-minute guide. Fixed versus trailing stop losses.
Hi, Deep Thinkers. I'm Gary Broad from Deep Knowledge Investing. We work with hedge funds, family offices, registered investment advisors, and individuals like you to help you get better returns in the stock market. I'm here with our host, Rob Farian. He's the CEO and founder of Flying V, our digital marketing partner. Rob, congratulations on the new office. Is that where you're broadcasting from today?
Yeah, Gary, coming to you from Southern California, Newport Beach, California, to be precise. Really excited to kick this week's version of the 5 things to know in investing for this week off. If you don't know or haven't been a part of our show, we cover the 5 most important topics to keep you in tune with what you need to know in the markets, with portfolio positions, and everything else in between. This week's version is the You're Fired issue. So, Gary, I'm sure when people see the title of this week's issue, definitely going to turn some heads for sure. We're talking President Trump. So I think if you have been watching the headlines, you know what we might be jumping into right out of the gate on this beautiful Monday morning. We've got Apple making an appearance, JP Morgan Chase, Coinbase, AMD, SMCI, and then finally we'll close it out with our educational topic where we talk about the difference between trailing and fixed stop losses. We got a jam-packed issue today. So as I alluded to, the You're Fired issue, this week's version of the 5 things, we've got President Trump in the headlines yet again. He fired the head of the BLS. That is our first thing. But Gary, it was great. My wife came to me and said, "Did you hear who President Trump fired?" I think just, my wife, love her, but hey, in terms of investing, more just, here's some things, know some things a little bit here or there. But with everything going on with Jerome Powell and President Trump, I think she might have even thought Jerome Powell when we were talking and going through what had happened. No, it wasn't Jerome Powell, but it definitely got everybody's interest. So thing number 1, Gary, President Trump fires the head of the BLS. Tell us what we need to know.
All right. So first of all, Rob, just for clarity, if the next time I go on vacation, we're just going to leave Mrs. Farian in charge. She can do my end of this. If she's following all of this, if she's following Powell, the BLS, that'll be great. All right. So last week, President Trump fired the head of the BLS. That stands for Bureau of Labor Statistics. The former occupant of that chair was Erica McIntyre. That led Democrats to claim the president was politicizing the BLS. They started wailing. There was hysteria. Everybody got really upset. They said that the firing was a threat to the integrity and independence of federal statistics. That sounds like a really serious accusation. If you do a web search, you're going to see endless political operatives and analysts claiming that the president's action is what threatens the integrity of the entire system. As usual at Deep Knowledge Investing, we want to examine the data before we draw our conclusions. So what President Trump was focused on last week was a gigantic revision in the employment numbers. It was 258,000 jobs. That is over 250,000 jobs. I have written dozens and dozens of pages the last few years on how inaccurate the BLS numbers have been. The revisions are always gigantic. It's gotten to the point where I stopped looking at it. I stopped analyzing it. There's really no point in analyzing data that's going to be revised by literally an order of magnitude a month later. They do these every month. By the way, it's worth pointing out that McIntyre was a Biden appointee who also presided over an 818,000 downward revision, right? So almost 1 million jobs got lost for the year ending March 2024. In addition to that, completely separately from that, there was an 832,000 job downward revision across 3 months in 2023. In fairness to McIntyre, she was not on the job when that happened. The revision took place on her watch. But I mean, the fact is we had 2 revisions that were almost 1 million jobs each. We just had a 250,000 job revision. The BLS is not reporting accurate numbers. That's the integrity issue.
Yeah, Gary, we talk about data, the numbers. We've been tracking the labor numbers for well, you a lot longer, me a couple of years,
Yeah.
just over the course of this show. We always talk about just nonsensical. These numbers make no sense. The bifurcated economy conversation, right? This public versus private sector. So, does President Trump firing the head of BLS actually threaten the integrity of this system when in reality this system has already had threats against its integrity because we know that the information is just not true?
So that's the key issue, Rob. And the really interesting thing is we've identified three possibilities for what could be going on. And I don't know that any of it matters. Here's why. It could be politically driven, right? I've previously suggested inaccurate data presentation might be politically motivated. President Trump just suggested the same. Sometimes you want to show good numbers for the guy in charge, but then the revision would be quiet later. It's a possibility. I don't know. Bad data is a possibility. James Lavish, who is an analyst I respect, he made a convincing case the BLS is getting bad data at the beginning and they need more time to publish accurate results. Okay, fair enough. Incompetence is a possibility. Maybe none of this is politically motivated, but they're unable to find a way to collect and report accurate data. In the end, it doesn't matter. The job is to report accurate data. If they can't do that, they should be replaced. And by the way, I think James Lavish, like I said, he made a phenomenal point that they don't have good data. But if you're running the BLS, figure out a way to get good data. This problem has been going on for years. I haven't seen anybody from the BLS stand in front of a camera and say, we've been getting bad data. Here are the steps we're taking to address that. In the end, Rob, firing the person who's responsible for producing bad data isn't a threat to the system, assuming the real goal of the BLS is to provide us with accurate data. It's a government agency that consistently reports inaccurate data that threatens the integrity of the system. What President Trump did was the right thing.
Yeah, it makes total sense, Gary. And you're exactly right with that data. Well, then get the data in the position that it needs to be structured, able to be analyzed. That's the job that needs to get done, and it needs to get done quickly because, as you mentioned, it's been going on far too long. And as we see a lot of times in government, things move slow and don't tend to get done. So I think this will be nice. Remove that bottleneck if that's what it is. Let's get the data in. Let's analyze it. Let's get accurate reporting so we all have something real to talk about on a regular basis. Gary, moving to thing number two, we're talking Apple. Another 100 billion coming from those guys up north from me here. Gary, thing number two, Apple continues to ramp up its U.S. investment with an additional 100 billion in manufacturing commitments. That gets their total, Gary, upwards of about 600 billion. What do we need to know for thing number two?
So, Rob, this is part of the AMP, that stands for American Manufacturing Program. It's going to expand Apple's supplier network across all 50 states, support 450,000 supplier and partner jobs, directly hire 20,000 employees, focus on R&D, silicon engineering, AI, software development. All sounds like great stuff. This is an additional $100 billion. One of the things that Cash and Crow, one of our interns, has been tracking, every time the White House announces a new infrastructure spending plan or big purchase agreements, he's been tracking that. If you take a look at the written version of the five things, you'll see he's updated the graph and the numbers are just enormous. But Apple had previously committed to $500 billion, $500 billion. This takes them to $600 billion. This initiative, by the way, also includes major partnerships. I got to read this one. Hold on. With Corning, Texas Instruments, Applied Materials, Samsung for chip packaging, Global Wafers, and others. They're going to be producing components for the iPhone and Apple Watch in Kentucky. They're going to build domestic supply chains. And, one key thing as well, the Corning aspect of this, they're the ones that make Gorilla Glass. They're going to be manufacturing that in the United States. So when you have your scratch resistant panels, that's where that's coming from. It's great to see. And by the way, given China's proclivity to hide spyware and malware and electronics, we've been reporting on that, right? Just a week ago, we were talking about the Microsoft breach led by China. A couple of weeks before that, a couple of months before that, we were talking about them sabotaging the solar panel inverters. Given China's proclivity to do this kind of stuff, we're going to ask the question again, should we keep buying from them just for the lower initial price, or should we be considering the fact that doing business like this entails a lot of long-term costs?
Yeah, Gary, what from a critic standpoint, I mean, what would they actually be saying about this, right? Or let's play devil's advocate on the other side. I know in other areas where we've talked about investment numbers and obviously deal after deal you're hearing about flowing in. But I mean, how realistic are these deals, right? What actually gets done? Is there that much capacity? I know we talked, I think it was in the auto space, like, or how much actual demand is there? And whether or not this capacity can actually even be met based on what these deals are requiring. Is that where the critics are coming from here? Is it a different story with what they're saying about these moves that Apple's making?
I think the critics are coming at this from a different angle, and they've got a legitimate point. And let's explore their thinking on this. Now, for clarity, where you were talking, Rob, about the capacity issue, that was related to the energy purchases for the
That's
trade
right.
deal between the EU and the US. The deal was for something like $750 billion of energy expenditures across 3 years, $250 billion a year. People were saying, hey, I don't know that Europe has the
Right.
capacity to buy all that. Okay. But is there demand in the United States for this much Apple product? Definitely. There absolutely is, especially if they move production out of China. They're also producing in India. They do some work in Vietnam, although not as much. So, yeah, to onshore, there's definitely the demand for that. I think the criticism comes from two places. In one case, it's irrelevant. The other is worth watching. The thing I think is irrelevant is some people are saying, "Oh my God, these are not new. These are not new commitments. Apple was going to do this anyway." Okay, great. I don't really care who gets credit. I care about the fact that they're going to build more than $500 billion worth of infrastructure in the U.S., and we're looking at something close to 500,000 jobs and more AI leadership. So, great. Fine. They were going to do this before. They weren't. It doesn't really matter. I don't care who gets credit. I just care that they do it. Now, the other place where the critics have a legitimate point is some people are saying, well, Apple doesn't really mean it. They're not really going to do it. They're saying these things in the White House to remain in President Trump's good graces. The idea is that by pleasing him on these issues, they will put themselves in a position where he'll give them favorable tariff treatment. He'll let them import without high tariffs for a while they're building this. And what they're saying, what the critics are saying, is Apple's not really going to build this. They're just managing the president, and they're going to play it out, hoping that in 2028 they'll get, they'll either get an establishment Republican or a Democrat who won't care about outsourcing and will just say, hey, it doesn't really matter. Do what you want. You don't really have to build this. And the truth is, I don't know. Like, I don't know what's in Tim Cook's head. I don't know what's in his heart. I think it's a valid concern. And I think the Trump administration and all Americans should be watching Apple and these other companies to see that they follow through on their public commitments. If they do, then we should applaud them, and the criticism wasn't valid. If they don't, then we should be saying, hey, look, you're talking in public about investing in the United States, but you're not doing it, and those companies should face consequences for that.
Yep. Yeah. Yeah. Great points right there, Gary. I think it's if they commit and they follow through, great. Let's celebrate that. We'll keep eyes on them, how it plays out in the public view. This is this week's version of the 5 things to know in investing, the You're Fired issue. Thanks so much for watching. I think, Gary, we're live streaming on X, LinkedIn, Riverside FM platform as well. So we're starting to kind of figure it out, or this whole podcast streaming, live streaming networks, the Twitch guys, they got it all figured out. We're a little bit behind the times, but we'll get caught up. Head on over to deepknowledgeinvesting.com. You can sign up for a free subscription to be added to our newsletter, and you will also be receiving all of content material that gets posted to the website. Some of that content will be gated for premium subscribers. They get access to DKI portfolio positions, buys, sells, all of that information, as well as exclusive content and material. So head on over there, take a look at what we've got going on. A few exciting things coming out in the pipeline as well. Gary and some AI I've been hearing about. That's going to be awesome. Talk about clash of two titans right there, which perfect segue into our third thing, Gary. Both the crypto side of the world, the fiat side of the world, two titans, behemoths, JP Morgan Chase and Coinbase in the exact same headline, which makes me smile, but also makes me laugh at the same time. Gary, thing number 3, JP Morgan Chase partners. I think this is the part that made me laugh, with Coinbase to fund crypto wallets. That's funny too, actually. So I guess it's just the whole headline. Gary, what do we need to know about
Yeah,
this?
it's outstanding.
What is Jamie Dimon saying now?
Yeah, so for people who aren't following the big banks, the CEO of JP Morgan Chase is Jamie Dimon. He famously, a few years ago, said he would fire anybody at JP Morgan who was dumb enough to be buying Bitcoin or buying crypto. And but for those of you who read the written version, we put something funny in here. We'll talk about the partnership in a second, but the line that was written here, I'm going to read this to you, is this deal highlights a broader market shift as major banks are becoming more tolerant of cryptocurrencies and stablecoins. I crossed that out and changed it to have found a way to profit from a fast-growing financial asset, right? I don't know that Jamie Dimon, found the light. I don't know that he's orange pilled. I think he figured out that his bank can make money from this, and it's sort of the banking version of where you sit is, where you stand is where you sit, right? If he can make money, he's in favor of it. Anyway, so JP Morgan Chase and Coinbase have come out with a joint venture. They're going to integrate cryptocurrencies into Chase's banking system. Starting this fall, Chase account holders will be able to fund their Coinbase crypto accounts with their credit cards. Now, is that really a big deal? No, not really. I have previously bought Bitcoin off of Coinbase. Don't worry, for the people in the Bitcoin community, I did not leave it on Coinbase. Never leave your Bitcoin on an exchange. You want to self-custody. But I've done that, and you just link your account to Coinbase and shift dollars in. So the fact that they can do it with their credit cards, okay, fine. And then Chase plans to allow their ultimate rewards points to be redeemed for cryptocurrency in the form of USDC stablecoins. And I think that's really interesting because we've been talking about this on previous versions of the 5 things, that these stablecoins are really a threat to the banking business. Banks are trying to make use of them. But once people figure out how to use stablecoins themselves, there's really no need to have your money in a bank. You can just self-custody. You can basically be your own bank, and you can send money to people without requiring the permission of the bank. And that's a really big deal. I've heard all kinds of stories. First of all, if you want to transfer more than $10,000, that gets reported to the government. But, there are all sorts of things where people have gone to the bank and said, hey, I'd like $3,000 of my own money. And the bank has said, what do you want it for? And like, it's none of your business. It's my money. Oh, we can't approve that. They'll hold your money. So I don't know that this is going to play out in favor of the banks, but these guys are doing everything they can to tie themselves into the fast-growing crypto space and try to make money from it. I do think it's really interesting. Earlier this year, a really smart, interesting person on the DKI board of advisors called me and said, what are stablecoins used for? And he had the idea at the time, which he's since understood is not the case. But at the time, he thought they were only used for money laundering. I said, no, these are legitimate financial instruments here. And then here we are, later this year, we've got people using, Chase Ultimate Rewards points to get stablecoins and to be able to use their money that way. So look, I like the deal. I don't think it transforms the banking sector.
Yeah, no doubt. Gary, my question to you is regarding how about Dogecoin, right? Do you have any plans to buy Doge in your bank account or any of these other cryptos just directly on platform? I think you alluded to it just in terms of wallets and your position there.
Yeah, I do not. DKI's thesis on Bitcoin is twofold. One is there is growing institutional acceptance that's going to drive prices higher. But more importantly, we've talked about this endlessly over years. any fiat, and fiat is a government-sponsored currency like the dollar, loses value over time. We experience that as inflation or loss of purchasing power. If any of you listening to this think about how much more your groceries or your rent or your clothing or the things that you buy cost now than they did a few years ago, that's inflation. Um, and this is done intentionally to take purchasing power away from you. And fiat will always lose purchasing power. The point of all this is with 21 million coins, Bitcoin is going to be limited in its issuance. It is the opposite of something that's inflationary. And so that's really where we are on this. We don't hold any crypto. We just hold Bitcoin. And for those of you interested in Bitcoin, it's okay to buy it through Coinbase, but please do not leave your coins on an exchange. They're not secure there. That old Bitcoiner expression, not your keys, not your coins, is accurate. We recommend self-custody. If any of you are having difficulty with that, we've published a guide for it. It's on X, it's on the DKI blog. If you can't find it, just email us. We'll send it to you. We'll let you know. This is not information that we want to try to hoard for ourselves. We want to help as many people as possible. Self-custody. You should be in control of your finances. You should be in control of your financial assets. We want to help you do that.
Yeah, Gary's got a great resource on that. And as mentioned, head on over to our website, use the Ask Gary. We can get that delivered to you, or I believe it's actually non-gated on the website and available. So just reach out. You can let us know, social media, wherever it may be. Moving forward, fourth thing for this week's version, we're talking AMD, SMCI, Super Micro. Gary, both delivered, or excuse me, AMD delivered strong growth. A little bit of declining growth on the SMCI side, but really the point of the thing here is AMD and SMCI get hit by strong expectations, right? So the expectations of what these stocks need to deliver continue to ramp up and up and up. Gary, thing number 4, what do we need to know?
Yeah, Rob. So it's important to understand that stocks will often trade based on how their earnings compare to expectations. So the expectations for AMD were sky high. To give you a sense of that, AMD shares had been up 80% in the 3 months prior to announcing their second quarter earnings, and they delivered strong second quarter results. Revenue was $7.7 billion. That's up 32% year over year. Earnings per share of 48 cents were in line with expectations. So the stock still fell by 6% the next day due to extremely high investor expectations. And people might say, well, wait a minute, they had 32% revenue growth. They met their earnings expectation. What happened? The answer is people were expecting something bigger. That's why their stock had been up so much. But the stock dropped 6% and then mostly recovered the next day. This was just a small dent in the recent rally. Super Micro, on the other hand, completely different story. Their post-earnings decrease was even more dramatic. The shares dropped almost 20% on the day. Revenue grew, but at a decelerating rate. This is like the corporate version of disinflation, right? You had growth, but less growth than you had before. They also had, this is a company that had soaring sales during the initial AI infrastructure boom, but things are slowing down there. Momentum is cooling, and that caused revenue to miss optimistic analyst forecasts. And when you're a high multiple stock, when you're a stock that's gone up an enormous amount and you miss forecasts, your stock's going to get hammered. That's exactly what happened. Making things worse, it wasn't just a bad quarter for Super Micro. Their forward guidance suggests a slower growth rate going forward, and people are really responding to that.
Yeah, Gary, I mean, what was the biggest thing just in terms of the difference with the way these two stocks reacted, right? I mean, completely opposite directions. I mean, what was the biggest reason for why that happened?
So the big deal, Rob, is that AMD actually had a good quarter. They just didn't crush expectations. And 32% revenue growth, they had earnings growth. They really just got clipped a tiny bit by the fact that their stock had been up 80% over 3 months. And, there's only so much you're going to be able to get out of any one stock. But they had a good quarter. Super Micro, it's a completely different story. Wall Street loves companies with accelerating growth rates, and the stock skyrocketed over the last few years. But the expectations were really high, and the growth was slowing. And slowing growth and a high multiple don't go together. And so that's really what happened there. they, in particular, super micro worried investors with guidance suggesting that the slowing growth rate isn't a 1 quarter issue. That's really the key thing. If they would have given stronger guidance, the stock wouldn't have been down so much. But then again, if they would have given stronger guidance, they probably would have missed next quarter.
Yeah. Yeah. Great coverage there, Gary, and covering just what these big players are doing, but also how that market's affecting one way or the other, and playing in the same space. So great breakdown there. This is this week's version of the 5 things. Head over to deepknowledgeinvesting.com. Check out options for free premium subscription. You can also subscribe to all of our different socials, channels, YouTube as well. Break this up into tons of different shorts, bite-sized material, as well as individual things throughout the week that will get rolled out on that channel if you'd like to subscribe. Gary, we're going to close it out with our educational topic this week. We're talking about trailing versus fixed stop losses. So again, we want to make sure we educate our audience, give back in terms of, Gary, your knowledge, information, and really building an investor pool, not only for people our age, your age, Gary, but also younger generation too. We're seeing a lot of good interest in them wanting to learn more and more about the markets and how they work. I actually saw a study the other day that it was a big number that asked, what's your best potential path to achieving the life that you want from a financial perspective. And I was talking Gen Z, and it was actually a huge percentage said investing was their number one opportunity, right? Not a good job, not college degree, investing, right? And I think it's true. I think it's true, and the data's out there. So I'll let you comment on that. Yeah, go ahead.
First of all, good for them. Rob, when you started that, I was terrified you were going to say their best path to growth was being a social media influencer, which I really thought you were going to say
that might have been number one, and then investing number 2, but that's all right. We'll take that number 2 position. Or I guess it could be good for me on both sides. But anyways, I digress.
You
thing number 5, Gary.
Let me add something here, because it's important. I think it's phenomenal that we have so many young people interested. Our young interns really do a great job on the finance side. We just added a new subscriber a week ago from our YouTube channel, young guy who's looking to build wealth over decades. Good for him. That's phenomenal. He's actually helping his dad with some things, which I think is incredible. And for those of you who are still students, we offer a huge discount for students. Just show us documentation that you're a student. We'll give you the code. We're really excited about the ability to help young people start to build long-term wealth.
Yeah, no doubt. And if you're out there, you're a student, we also have plenty of discounts for you also. So please, again, just reach out via our website. Get you some codes over there for discounted subscriptions to the platform. So Gary, let's get into it. Educational topic to close out this week, trailing versus fixed stop losses. First, Gary, let's just talk about what's a stop loss.
So, Rob, a stop loss is something that some investors will use when they want to make sure they don't have a possibility of taking a big loss in a name. They'll own a stock and they'll set up a system where if the stock drops by a certain amount, they will automatically sell it. Now, keep in mind, this is the opposite of that old Wall Street mantra, that old saw, you want to buy low and sell high. This is you buy it, hoping you can sell it higher. But if it falls, they're actually going to sell it before it falls a lot. Now, that won't help in situations like we were just talking about Supermicro, which dropped 20% all at once. If stocks gap down, it won't help you. But a stop loss is where an investor, when they buy a stock, they put in an automatic sell order where if the stock drops by a certain amount, they'll sell it. They're saying, you know what, I will take a 5 or 10 or 20% loss rather than risk something going down 50% on me.
Gary, let's talk about a fixed stop loss now. What's a fixed stop loss compared to just a traditional stop loss?
So a fixed stop loss is where you fix that sell point at the time of purchase. So let's just give an example. Let's imagine an investor is buying a stock. The price of the stock is $100 and they want to use a 10% fixed stop loss. They would automatically sell the stock if it declined to $90, right? And that $90 is fixed. So assuming the stock doesn't gap down, what that means is that the maximum loss that they could take in any given name, or sorry, in that particular name, would be $10 or 10%.
Next one, Gary, going down the list here.
Yeah.
Trailing stop loss for our audience. What is
All
a
right.
trailing stop loss?
A trailing stop loss is one that will adjust with upward price movement in that same stock. So let's use the previous example we had of a $100 stock. And this time there's going to be a 10% trailing stop loss, not a fixed one, a trailing one. So now let's further imagine the stock rose to $120. A 10% drawdown from there would be $108. That means the stock in this example would automatically be sold if it dropped back down from 120 to 108. The fixed stop loss, it would have to drop all the way to 90 to be sold. In the trailing stop loss, in this example, you'd sell it at 108. And again, they put in those orders ahead of time so that they're executed automatically.
Gary, why don't you give us then an example? Why would someone use a stop loss? What does a scenario look like in that situation? Someone would want to be using these strategies.
So I think the key thing is you need to know what your risk tolerance is and how that impacts your investment thesis. If you're a short-term trader, or if maybe you have a lack of confidence in your thesis, or maybe you don't know what's going on in a particular name. There are a lot of people who buy stocks, a friend told them something. They don't really know why they own it other than someone they like told them about it. A stop loss can be an effective way to limit losses, particularly if you're on tight risk tolerances. A lot of times, investors who are using a lot of leverage or margin will use stop losses because when you're leveraged, as we talked about in last week's 5 things, you run the risk of losing money on a larger amount of capital and having to pay interest expenses. So a stop loss can be a way to ensure losses, but it can also be a way to ensure you don't take big losses. A lot of the highly leveraged shops, places like, Citadel or Millennium, where they use a lot of leverage, they're using a lot of capital, they worry a lot, understandably, given their balance sheet, about taking big losses. And so in a place like that, they're okay with you buying a stock at 100, selling at 90 and buying it back at 100. And somebody might say, well, wait, they just took a $10 loss. Yeah, but they ensured that the stock didn't go to 50. And so that's why you would do it.
Gary, do you use stop losses? So is this something that you deploy within your strategy? If not, why not?
Almost never. I really don't use them. And the reason is because I'm a long-term investor. And if I'm investing in something, I almost certainly have a really well-researched thesis. I often view price declines as an opportunity in a situation like, we talked about, where if I'd like a stock at 100 and it drops to 90 or 80, and I understand the reason why, and I disagree with the reason why, and my investment thesis is still intact, I view that as an opportunity to buy more at a lower price. As an example, on more than one occasion, one stock that we've owned that's been really volatile is Las Vegas Sands. The ticker is LVS. On more than one occasion, we've bought that stock when it declined on news that we considered to be unimportant or temporary. This is something we covered in last week's 5 things. And so, the stock drops. And as long as I understand that the reason for it is long-term unimportant or temporary, we just buy more of it at lower prices. When the stock recovers, we're making money on a larger amount of capital on more shares. We bought it lower. So look, the key thing is that somebody might say, well, wait a minute, you're buying it on the way down. If it keeps dropping, you're going to have more capital. There's risk to that as well. There's no path through that entails no risk, but you have to know what your investment thesis is, what your investment philosophy is. And in my case, if I'm owning something for the long term, if I have a really well-researched investment thesis, if that thesis is still intact and I understand the reason the stock has dropped and disagree with it, I'm going to be buying more, not selling it on that drop. And that's what works for me.
Yeah, no, that's great. I actually was reading a strategy the other day. It was talking about diversification, where your weighted portfolio sits, and it was talking about just the group of tens, right? Where 10 stocks, whatever you would put into those 10 stocks, put a tenth of that, right, and then you're allowed to buy up to your, whatever your full allocation is, to where you're actually almost rooting in a way for that stock to go down early on, pick up more shares if it is longer term investment. Or, okay, if you do start making money on that 10%, obviously sell, get back original investment, ride the profits, right? So interesting strategy, a lot of different ways to do it. But yeah, Gary, I would agree with your approach. We're always looking long-term investment thesis, right? Those for us are more so opportunities. I don't want to be caught in a situation where I have a stop loss set up, all of a sudden, boom, it hits that lower limit and I accidentally sell, when in reality, if I really did like the stock, I'm going to be wanting to buy more of the stock when it hits that particular limit. So anyways, Gary, great show as always. The you're fired issue, you're not fired, hopefully I'm not fired, we'll both be here back next week, so no one on this show is getting the you're fired. We made it through to another week. So Gary, I'll turn it over to you. Final thoughts. Head on over to deepknowledgeinvesting.com. We'd love for you to join our community that we're building. We got a lot of fun, new, exciting stuff to really build out network community of investors and really just wanting to win together. So Gary, turn it over to you for final closing thoughts.
Yeah, Rob. So a lot of exciting things happening at Deep Knowledge Investing. As you talked about before, we are going to have an AI version of Ask Gary. We'll see how well that works out. But I've taken a look at an early version of it, and it gives some really good answers, some not so good answers as well. We're working our way through the kinks, but that'll be good. In addition to that, Rob and his brother Tyler are setting up a Discord where we're actually going to be building in public. And there's an idea I'm going to work on with one of our young interns. We're going to work on it together, and it will let our investors, it will let our deep thinkers and premium subscribers get a chance to see how we work our way through an idea. A lot of times people ask me about the process, and I try to give them a general idea. And you know what? Let's not tell you what we do. Let's just show you, right? Let's just put up the work as we do it and let people follow along and see the kind of things that we look at, the kinds of questions we ask. It'll let them participate. Maybe they'll have questions. And we'll turn it into a collaborative project. I think everybody will enjoy it, learn something that should be really interesting. There are a couple other things we're working on as well that will be new and exciting. We're not ready to announce those yet, but tune in. We'll talk to you about it. A couple of people that we want to thank. As always, I get to be the person on talking to you, but so much of what you've just heard is a result of hard work done by our interns, Cash and Crow, Samak Jain, and Gideon Rodham. Good job by those guys. Really appreciate it. Rob, I know it's early there in California. Thank you so much. Really appreciate you and the team at Flying V, John and Alex, Nazim, Anton, everybody else there who gets their hands on this. And most importantly, for those of you watching, we know your time is valuable. Thank you so much for spending it with us. If you want to give us a like and subscribe, we'd really appreciate it. But hey, do what you want. We're not the boss of you. We'll look forward to seeing you next week.
Thanks, everybody.